Hey guys, you're back with Steph Den, and today we're talking about dividend investing. We've done a few different videos on our investment portfolios, and the most recent one was an update on my portfolio where I talk about how a few of my different holdings give me a dividend. So today we're going to talk a little bit more about what that actually means, the pros and the cons of dividend investing, and overall if dividend investing should be something that you're focusing on or not. So if you're excited for this video and more content just like it to come, subscribe down below, show us some love down there, and let's get right into it. Okay, so in our last investing video, we got some feedback that our content was a little more complex than it usually is. So today we're gonna take it back to the basic, keep it as high level as possible for you all, and explain just the basic terms of what dividend investing is. And as always, we try to respond to every single one of our comments if we can, so drop any questions, comments, thoughts, feedback. We wanna hear all of it down in the comments below for us to check out after this video. But for now, let's get started on what dividend investing is. Dividend investing is an investment strategy where you choose to select and buy individual stocks that would pay you out in dividends in order to receive a consistent income from those investments that you're making. And this would come on top of any growth that your investments are gaining as the stock actually gains value over time. So for a very simple example, let's say that you bought a dividend paying stock for $10 per share, and then that stock grows to a value of $20 per share. Obviously, for each share you bought, you gain that $10 of capital gained, but you would also, on top of that, get that consistent dividend paid out to you as well. So why does this happen? Dividends are payments made from a company to its shareholders. So when you receive a dividend payout, you are literally receiving a share of the company's profits. And on top of that, it provides you an additional income streams from your stock investments. Now, a really important question that you might have at this point already is how do you know if a stock is a really solid dividend paying stock? Now, for this question, it is important to understand a couple of different things on top of just looking at which companies have the highest dividend paying yield. The one is what is their dividend payout ratio, which will tell you how stable the company's profits are. And second, has the company grown consistently, and have they made an effort to actually grow the amount of the dividend that they're paying out to their shareholders? And you may have also heard us talk about dividend reinvestment plans or DRIPs before in our past videos. This is particularly useful because it's automatic, and the more passive we can be with our investments, the better, the less hands-on. And on top of that, if you don't own much stock yet or your dividends are still really small because of that purpose, you may not want to actually take out the cash anyway, so it's useful to have it automatically reinvested to continue to grow that investment. On the other hand, you don't have to do this. You could also take that dividend payout and use it to invest in other stocks on that same platform, or you could completely take it out altogether and take the cash. So to give another and more personal example, my investment in Bell Canada's stock is actually a dividend paying stock. They typically pay $3.33 annually per share, but they actually pay that out on a quarterly basis, which rounds out to approximately 83 cents per share paid every 3 or so months. So with my 3 shares of Bell Canada that I do have, and again, this is an example of when you haven't had much invested into one stock yet, but in that case, for my first quarter investing in that stock, I got paid out about $2.50. But for a bigger example, to give you the fuller picture, if I had 100 shares of Bell Canada, I would have gotten about $83 on that first quarter. Usually buying dividend stocks is a lower risk strategy. Typically, the stocks that pay dividends aren't very volatile given the stage that they're at in their life cycle. They're typically a little bit more mature, and they're not pouring all of their leftover cash into the growth of the business at this stage. So if you look for companies with a history of stable income and cash flow, the more guaranteed or at least likely that dividend payout will be for you. And on top of that, the more stable the money coming in is, the more likely that a higher payout ratio over time will occur as well. So now that we've covered what dividend investing is, let's go ahead and jump over to Den to start talking about the pros and cons of this investment strategy.
All right, so to kick things off, let's talk about the pros of dividend investing. So number one, dividend stocks or dividend paying stocks are typically synonymous with value companies or value stocks, as opposed to growth stocks like your Googles, your Facebook, or some of the high flyers that are growing at like astronomical numbers year over year. Basically, companies that are actually able to pay out a dividend are typically companies that are actually making money. This means that they have steady profits that are coming in, and they're typically a much more safer bet to actually invest in. So number two, or building on that point, basically dividend investing can give you a sense of security or what's called an emotional benefit. I'm sure we've all seen that markets can be pretty crazy. There's ups and downs. And if you're someone who's investing for the future, you have to be willing to ride those highs and those lows, right? Now, I know we've definitely talked about this in the past, but if you're someone who's gonna be panicking every time you see red in your account, or, just freaking out from all the market ups and downs, then you might wanna hold something that's more steady, something that at least in your mind, you're getting something out of at the end of the day in the form of that dividend, right? So maybe this might be the better option for you. Now, number three is something that Steph already mentioned, and that's DRIPs or dividend reinvestment plans, but they are really a great option that's available to the majority of dividend investors that basically just allows you to reinvest the dividends that you're getting back into owning more shares of that company. Now, last but not least is a simple fact that dividends can actually have tax advantages. First and foremost, if you're in Canada and you're investing in Canadian dividends, there's actually a tax credit that you can use to reduce your taxable income. Now, for more context, it is for dividends that you hold not inside your registered account, so not inside an RIF, an RSP, or a TFSA. But if you do have it, for example, in your non-registered account, then you can use that tax credit to bring down your taxable income.
Okay, let's jump right into the cons. The first con is that dividends are not guaranteed. So you might be investing in dividend paying stocks because you do want to gain income today, but dividends are not something that the company is actually obligated to pay out consistently. And if a company is in a position where they do need expenses to be cut, dividends could be that expense that they cut. You can decrease this risk by, of course, simply keeping an eye out on the performance of all of your stocks in these companies, but you can also mitigate the risk or at least have it have less of an impact on you if you have a diversified portfolio where one company cutting their dividend won't be a huge hit for you. And something to mention as well is that you could also find dividend-focused ETFs or mutual funds to invest in instead of dividend-paying individual stocks. Next up is that dividend investors typically aren't as diversified as you may want to be with your investment portfolio. Dividend stocks are typically in utilities and banks and overall in industries that make a lot of money from necessary products like energy or financial services. The problem with this is that it might mean that there's a lot of money in that area, but there's not a lot of diversification. And for Canadian dividend investors, the option for diversification is even less so because our economy here is primarily driven by banking and by energy. This could mean that the long-term results are just simply not as good as investing in market tracking funds. Also, to build off of that last point, there are only a limited number of blue chip dividend stocks in Canada specifically that actually have a long-term history of paying out their dividends. So because of that, dividend investors may end up supplementing their portfolio with some of these smaller dividend stocks that, again, do have a dividend payout but don't have that long-term history, typically are more volatile and could end up leading to not great returns or a loss of money in the long term as well. So on that note, let's jump back to Den one more time to wrap up and talk about our thoughts on dividend investing and if it's something that we're focusing on.
Okay, so last up, let's actually talk about our personal thoughts on dividend investing. And for anyone who's been tuned into our previous investing videos, you probably noticed that we weren't really focused on dividend investing. Like for example, Steph does own some companies that pay out a dividend. I own a company that pays out a dividend as well. But our main focus just yet isn't necessarily on dividend investing. So if we take me for a second, I'm personally utilizing Questrade to invest in, long-term broad market ETFs. And any of the individual companies that I do own, at least moving forward, are going to be more growth-oriented companies. In Steph's case, on the other hand, you'll notice that she's actually utilizing Wealthsimple to invest for the long term. So she's got some broad market ETFs there. But any individual stocks that she does own, some are geared towards steady growth, and others you'll notice are actual dividend paying stocks that pay those sweet dividends that we all love. I think in general, we'll see her individual stock portfolio evolve over time, especially as she gets more hands-on and actually learns more with time and progression, right? So far in her Wealthsimple trade portfolio, she's just kept it to Canadian companies because those are commission free. But once again, her portfolio right now is still pretty small. I think it's less than $2,000. So we will see some progression, at least on that side of things, over time. Personally, I think given the fact that we're going to be invested in the market for years on years to come, I think it only makes sense for us to be more growth oriented, at least now in our more youthful years, as opposed to later on, right? I personally right now would rather own a company, and yes, I did say own because I do consider myself an owner every time I invest in a company, but I would rather the companies that I own to be reinvesting their money, to be reinvesting the cash that they're making back into the business for growth, hopefully for that capital appreciation. Here's the thing, and yes, I will wholeheartedly agree that, dividend investing is a great form of passive income, but at the end of the day, with yields still being relatively low, you do need a lot of capital to actually have a meaningful amount of income coming in. And what's interesting is that when I hear people like Kevin O'Leary talk about, dividend investing and you should only be buying dividend paying stocks, you have to think about it because he's looking at it from a different perspective, right? Like he's got so much capital that he's able to, push towards some of these, dividend aristocrats, the Coca-Colas of the world, or, some of these companies that pay really high dividends, right? Overall, and I'm sure you can see this from the pros and cons that we listed off today, dividend investing is typically a more risk-averse way of investing. And right now, given how young we are, you are still going to be seeing us buy some dividend-paying stocks, but for the most part, our main strategy is going to be picking up some of those more growth-oriented companies. Once again, and I know we've mentioned this so many times, there is no right way to do something. So if you guys have any other thoughts, let us know down in the comment box below.
Alright everyone, that is a wrap for this video. We hope it was another informative one, sharing everything you need to know about dividend stocks and dividend investing. And as always, we'd love to hear your thoughts, comments, feedback, questions, everything down below, so leave us some comments to check out. And before we leave you, I do want to talk a little bit about the platform that I'm using to invest in some of these stocks that happen to be paying me a dividend. So on that note, I want to thank Wealthsimple for sponsoring today's video, which is again very exciting for us. As you all know, I've been using both the Wealthsimple Invest and Trade platforms to do all of my investing so far this year. Wealthsimple Trade in particular allows you to participate in commission-free stock trading where you can buy and sell thousands of stocks and exchange-traded funds, or ETFs, on major Canadian and US exchanges. There's also no commissions on trades or any account minimum. So you can see here what my account looks like, and one of my favorite parts is how easy it is to see right off the bat exactly how my portfolio is performing. And then you can scroll past how it's doing over to my watch list. You can see how the market's doing that day and see what you might want to pick up next. And something that I really wanted to highlight today on the topic of dividend investing is the transaction history section. Here you're able to see all of your buys as well as all of the dividends that you've been receiving. So in my case, as I scroll through, you can see that I've received dividends from BCE, from AQN, and from T, all from the month of April for a total of $8.32 paid out to me. If you're interested in getting started with the Wealthsimple Trade or the Wealthsimple Invest platforms, we'll have links to both down below for you. And those links will give you a $25 cash bonus for signing up for Wealthsimple Trade and a $50 cash bonus if you sign up for Wealthsimple Invest. So a huge thank you again to Wealthsimple, and we hope that you'll check out those links after this. And also, if you haven't seen any of our previous investing videos, we have a bunch for you to check out next door, so make sure you do that after this. And we'll have more videos coming your way soon as well. We'll see you there.